short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners and shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
And welcome to Phil's Gang Podcast. All right. We do this every day for you, try to fill you in on what's going on in the stock market. And just check out philsgang.com. We've been teaching how to trade stocks since 1998. Let's talk about today. No surprise, the S&P ended the third quarter yesterday with another near record all-time high. I've lost track. I don't know if it's 27, 37, it's almost every day. But here's the funny thing that investors don't realize, and they got to realize this. Just like the same thing that happened to Cisco. Okay, remember NVIDIA is our Cisco, okay? That didn't end well. But it doesn't, if you know how to follow the money and you see the signs, the markets just don't crash. They just don't crash. You don't wake up and the market crashes. It doesn't work like that. You have plenty of time. The market crashing, think of it as like turning the Queen Mary. It's not a cigarette boat. It takes time. If you know what you're doing, the signals are out there. And they flash, and you get the signals from the bond market. You get the signals from the gold market. Gold market right now is signaling, hey, this market's crazy. But you don't get out of the market. Why would you get out of the market? If you got enough crazy people keep driving the same stocks, and you got the Treasury Department keep printing money, keep giving it to Powell, and Powell keeps taking the money and giving it to his five biggest banks, and five biggest banks keep giving it to the CEOs so they can keep doing stock buybacks. And their debt, they don't care about how much debt these companies have. Take Oracle. Oracle's nuts. Do you know that Oracle right now, debt to equity is about 500%, 520%? Debt to its equity. No company's ever done that. I think the closest one to that is IBM and Apple, which is about 250%. 250% debt to equity. Oracle's over 520%. That's just nuts. So the S&P ended its third quarter yesterday with another big all-time high or near all-time high. But it's not because of its earnings. It's not because of its profits. And that's where the downfall is going to be. I projected the stock market's not going to have a correction or a crash until probably the first or second quarter of 2026 because remember, when you have a new president, that president, he's going to keep that stock market going. And he can keep increasing the money supply, not directly, but indirectly with his policies. And the money supply keeps on cranking up, keep going up to keep these stock buybacks going. So, but you got to remember, at the end of the day, we ended the third quarter with another, as I say, all-time high, not because of earnings. Not because of profits. Earnings, remember, is the income that's generated by the business. Profits is the money that's left after the business pays its expense. Earnings, profits, that's interchangeable, those two words. Both those have been the mother's milk of the stock market. For years. Probably going back to the tulip days. So earnings and profits, it's always been that way, but no longer. It's changed. They changed that in 2009. So, and I don't think most people don't understand how the stock market works, and most people don't understand how we have this huge stock buyback bubble, and most don't understand what a stock buyback bubble is or how it's created. So I'm going to explain a little bit of that today. So, again, the entire stock market, since it started, is always based on earnings, profits, okay? And again, remember, earnings are your mother's milk, of course, but earnings decide the direction of which the stock's going to go. Earnings, profits, direct the stock market, direct individual stocks up or down. That's why it's so important that you drive earnings and these profits. But in 2008, they eliminated that after the crash, or in 2009. They said, we don't need that anymore. Forget earnings and profits. No more. The top 1%, who controls Wall Street and who controlled the 5 largest banks and who lost $12 trillion, said, look, Obama, we got to get our money back. We lost nearly $12 trillion. If we try to get it back by increasing business investment, it's going to take us years. To get that. We want to claw that money back right away, and we're going to put you in office so you do that for us. We want a shortcut. So you got to come up with a way to financially engineer this market. And if you don't, we will. But we put you in office. So forget earnings, forget profits. What are we going to do? Borrow trillions of dollars? And we're going to start doing business investment? We're going to spend money on new machinery, new equipment, training people? My God, that'll take us for years to get our $12 trillion back. But we got a better idea. How about if we financially engineer the market so we replace profits and earnings? Let's get rid of those. We'll do stock buybacks. People won't know the difference. They just see the stock go up. Most people don't know what makes a stock go up anyways. So with a stock buyback, we'll control that stock. We'll control the direction of the stock market and the individual stocks. So that's what they did. By eliminating the mother's milk of stocks, earnings and profits, replacing it with stock buybacks, which essentially is this. Let's say you got company X. It makes speedboats. Its earnings is $10 million a year. Pretty good, doing pretty good. And it has $10 million a year is its earnings. It has 100,000 shares outstanding. So that has earnings per share of about $100. So you got a company that has profits around $10 million. It has 100,000 shares outstanding. You equate that to earnings per share about $100. Now the CEO wants to start getting his money back he lost in 2008. He wants to push these stock prices up because his contract and his income is tied to stock, to the stock price. He wanted to get these stocks going up. And companies didn't want to go borrow either. So here's what they simply do. Without any increase in business investment or any increase in marketing or top-line sales, all he does is he reduces, the CEO to simply reduces the 100,000 outstanding shares to 90,000. He does a stock buyback. He buys back these 10,000 shares, drops from 100 to 90,000. Now his earnings per share has increased to $111 from 100. And he's got a boatload of shares. He just made a god-awful amount of money. But wait a minute. We're missing something. There was no increase in money supply, which means there was no building of equipment or machinery, no buying assets, no hiring. So how the hell did the stock go from 100 to 111 when there was no investment in the company? All you do is just keep reducing the number of shares. Every time you increase the number of shares. So we don't need. So what they did by doing that, they said they're going to only do this for about 90 days. And then end up 6 months. And then, of course, it ended up forever. So think how dangerous this is. So you just simply keep reducing the amount of outstanding shares, and your stock, your earnings go up, and it pushes up your stock price. But remember, how do earnings normally go up in the stock price? Well, earnings go up from sales, from increased sales, from business investment, IT spending. You keep, instead of manufacturing 1,000 shares an hour, now you can manufacture 2,000 shares an hour. This is how manufacturing works. But no, they said, we're not going to manufacture anything. We're not even going to, we're just going to keep doing this, stock buybacks. And we'll do it for about 6 months. It's been what, 14 years now? So that's what people don't understand, how bad stock buybacks are, how dangerous stock buybacks are. Now, the stock market keeps going up because all these companies, again, they're not increasing earnings. They're not increasing their profits. They just keep reducing the amount of shares. And then your earnings go up and your price go up, but you have no sales accompanying that. Sounds illegal, doesn't it? Well, it was illegal for years. I mean, doesn't that sound pretty crafty? Like you should go to jail? And if you're sitting there and you're CEO of a company and you're pushing the stock from $100 to $500, and I'm buying your shares thinking you're doing a good job, but only come to find out you're not increasing your sales. You're not running a good company. You're not training people. All you do is keep buying back your own stock, keep reducing, till one day that bubble's going to pop, just like Cisco popped. It will pop one day. But if you know how to trade properly, you just keep following the money and you keep buying, keep setting your stops, keep taking profits, keep buying. But the one tool you need, the one arrow you need in your quiver, you need to know how to sell short. And you need to identify, well, when do you know the market is going to correct or the market's going to crash? Well, professionals know that. Anyone who's been trading a long time, you know that. You know what the signs are. There's not one professional out there that gets surprised by a correction or by a crash. The only people that get surprised are those traders who we call tourist traders, who are gamblers. They don't want to learn anything. So again, we got millions and millions of dollars that are being printed every day, and all that money's printed. That's inflation, and they've been lying about inflation. Our inflation is probably about 5%, but they've been lying about because you can't keep printing trillions and trillions and trillions of dollars for stock buybacks and not have inflation. So and the other thing that's very bad is that who's getting all the profits? Who's making all this money with stocks going from $200 to $800 a share? Who's making all this money? The top 1%. That's it. The top 1%. Their wealth has soared in the last 10 years by 42%. But the guy on the street who makes between him and his wife $65,000, $75,000 a year, have a couple kids, in that same 10 years that the wealth soared 42 trillion for these top 1% guys, the guy on the street his wealth increased $335. $335. So we got this stock market that keeps going up because, again, we're going to keep doing these stock buybacks. But the companies are getting loaded up with debt. I just gave you Oracle. How the hell you can sit there and buy a stock of a company, Oracle, whose debt to equity is 520%? Well, you can if you understand the signs of when that stock is going to start cratering, when it's going to start pulling back, and you have the skill to sell short. See, that's the key to the market. See, they've always discouraged you not to sell short. If you sell short, you're going to lose all your money. No, if you don't sell short, you're going to lose all your money. You got to learn how to sell short. That's your insurance policy. Stops are another insurance policy, but sometimes they'll blow right by your stop. You got to learn how to sell short. So now, again, interest rates keep trying to push these interest rates down. But you notice the 10-year Treasury yield keeps going up. Now, just lately, in the last week here, they've been pushing it down because we got all these hedge funds trying to short it. It's not going to work. So, again, we're on a very dangerous path, but we're on a very profitable path if you know the signs that when this is going to correct or
Want more
crash.
information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grandy of philsgang.com. You know, over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. You know, I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. You know, if you invested $1,000, if you invested in NVIDIA, just $1,000, 2009, you'd have $458,000. That's when you should have bought. Not today, but you have the tourist investor who are buying today. Why? Because all these investors, we call them tourist investors because they don't want to learn. Not that they don't want to learn, they're gamblers. They gamble. They sit and think, see, if I can make just $100 a day, or I can make $500, or I can make $1,000 a week. Never works like that. So let's think about this for a moment. If you bought NVIDIA with $1,000 in 2009, you'd be at $458,000. You think you missed it? Sure you missed it. Unless you have the skills to identify when to buy these stocks, we call them power stocks. When do you buy a stock like this that you miss? If you miss that beautiful entry point, when can you buy these stocks so it's safe? First of all, none of these tech stocks are safe. What makes it safe is your skills. So you can identify. Volume sends you a message, what's going on with that stock. Interest rates send you a message. The bond market is a huge message. Now, Apple, if you invested $1,000 in 2008, you'd have $48,000. But you missed it. Does it mean you can't buy it now? Of course not, because these stock buybacks, they can keep running these stocks up. They could double these stocks, triple these stocks. That's why I keep telling everybody. You know, when I first started to go on podcasts, I used to tell people there's going to be a market crash. And they wanted to stone me to death. Anytime you talk about a market crash, then, you were wrong. No, I wasn't wrong. There is going to be a market crash. I didn't say the market crash is going to happen Thursday at 1:15, you dope. I didn't say that. There's going to be a market crash. You just got to have the skills to identify when. What is it that makes a market crash? Stock buybacks make a market crash because you don't have any profits. You don't have any earnings. The only reason why the stock went up because you keep reducing the amount of shares that are outstanding, and when you have less shares, your stupid stock goes up. So instead of buying NVIDIA in 2009, $1,000, you'd be up almost $500,000. People are buying NVIDIA now, or they're buying Oracle now, and its debt to equity is up 520%. What are you, nuts? Of course you're nuts. But if you have the skills, you can do it. Now let's think about this. So, no longer do anyone care about they care about earnings. Who cares about earnings? Who cares about profits? As long as you do stock buybacks, they're not necessary. We know that. 2025. There's so much confidence in this market because they've authorized $750 billion in stock buybacks for 2025. We're already through 8 months. That's why I keep saying I think this market can continue to drag along right up into the first or second quarter. And then we're going to have a huge crash. It's going to come. There's no way you can avoid it. You can't keep taking stocks and moving their price up 600%, 1,200%, 200% with no earnings, no profits. How long do you think that's going to last? But you can't convince anybody of that. Now think about this. $750 billion has been authorized for stock buyback. Just 20 companies of the S&P 500 accounted for more than 50% of that $750 billion. It means just 20 companies are going to be pushing this market up using $750 billion, and they're not pushing it up because of earnings or profits. They're pushing up because they're making sure that the company has less shares outstanding. And companies' debt are getting bigger and bigger. Corporate debt is huge. So $750 billion they authorized for 2025. We're already through 8 months. But only 20 stocks are going to share into that $750 billion. 20. This is crazy. So, in the last 12 months, we spent about, if you go back 12 months, this IT sector, in the last 12 months, spent $276 billion in stock buybacks. Apple led the stock buybacks over this past 12 months with $106 billion. And that comes to about 10% of all stock buybacks. Since January 2025, Apple, Google, Meta contributed the most in stock buybacks for the first 8 months of 2025. And NVIDIA is the biggest contributor with approximately $335 billion in stock buybacks. So you understand what's going on. If it wasn't for these stock buybacks, this market wouldn't be going up. And you just got to put in the back of your mind when you're trading. Earnings and profits. That's always been the mother's milk of our business. Those are gone now. Those are gone. You don't need earnings profits. They've been replaced by stock buybacks. Oil. Again, people don't understand. When you see gold making new highs, when you see people buying gold who never bought gold, when you see central banks around the world buying gold who never bought gold, that's telling you the market's going to have a crash. Now, don't send me a bunch of hate mail. I'll change it. There's going to be a price adjustment along the way, okay? We're going to have a price adjustment along the way, okay? Oh, my God. Oil. So you look at gold, when gold's going up like this, it's telling you the smart money knows a crash is coming. That's why they're dumping their tech stocks so that the tourist investor buys all the tech stocks and they're buying the gold. The smart money's buying gold. Gold stocks. Look at our gold stock. Our gold stock's up about what? 40, 50%, something more than that. We got into gold stocks long ago. I told my gang members at the beginning of this year, I said, this year, 2020, where we're going to make most all our money is gold mining stocks. Because people are going to be scared to death. The economy's horrible, but they mask it. Every time you turn the TV on, boy, everyone tells you, boy, what a strong economy. We never saw a strong economy like this. So strong, so strong. All these things that are going on, so strong. Then why is there personal bankruptcies up 28% since January? And why do we have corporate bankruptcies up 40%? Unbelievable. And why are people, we've never seen so many delinquencies with credit cards and mortgages and autos and even rent. Savings at an all-time low, 2.3%. But they're telling us how great the economy is. Bunch of BS. Now, think about this. Oil. When Biden and Trump were running, Trump made a deal with the Saudis to pump oil, a whole bunch of oil to get oil down so we get gasoline prices down so he could get elected. Now, Biden didn't make any decisions. Somebody in Biden's White House made a decision to do the same thing. So we got so much oil right now, there's no demand. And demand is getting worse and worse and worse. That alone tells you, if we don't have demand to suck up all this oil that's been produced, that means the economy is getting worse and worse and worse. And individuals, we've never seen so many people signing up for unemployment like we're seeing now. So Biden increased the money supply by printing $6 trillion between 2021 and 2025 to make sure the stock market would go up. All he did is created inflation. All this money he printed between 2021 and 2025, when he got out, he spent all this money on woke and green energy. And inflation soared. Inflation went up to 9%. But think of it this way here. Every year he was in office, inflation rate increased by 4.5%. 5 minutes. Imagine. And then they would lie about creating jobs. So in other words, inflation rate increased 4.5% a year. Cumulatively, if you extrapolate it, it increased 19% over Biden's 4 years. 19%. And then to mask it, he fakes 1.1 million jobs. So he's creating an illusion of a solid economic growth. But wait a minute. When in 2021, our growth was at 6%. It dropped from 6% to 2.1% by 2025 when he left. But yet you look at the stock market, it keeps going up, making all-time new highs. But it's not. It's just a handful of stocks. Enjoy those stocks. Make money on those stocks. Learn how to trade those stocks properly. Learn to understand when are those stocks going to pull back. You get signals. You have signals. This is not a guessing game. You should be fully invested in this market only if you know how to identify when money is shifting out, when the stock's going to go down, so you can turn around and sell short. People who are in this market after stocks have exploded over all these years and you're getting in now, that's fine. We call them power stocks. We're buying power stocks right now. We're buying stocks that are up 2, 3, 4, 500%. But we know how to spot when that stock's going to turn around and start reversing, so we turn around and sell short. If you don't have that skill, you shouldn't be in this market. But think about this. The GDP between 2021, it was a 6%, our growth dropped to 2.1%. So Trump inherits this horrible, horrible economy, this weak labor market, no economic growth, but now all of a sudden everything's okay again. No, it's not. I mean, this whole market's been driven by this increase in money supply, starting with Biden, $6 trillion. That's how we keep this market going. Spending going wild. He spent a lot of that money on woke and green energy. And also he wanted, in drilling, he wanted to get oil because he wanted to get so much oil out there so gasoline prices would drop. So again, if you just take a look at the stocks, the market every morning, that's what we do. Before we start, we do a scoping of each group so we know where the money's going so that our gang members know exactly where the money's going. Now, one thing I always tell them every morning is watch ARK, okay? Because if you watch ARK, A-R-K-K, that's the sentiment. You can understand the sentiment of all these young traders are all jumping in. And they're not just they're young, but they're all jumping in, still buying tech, thinking tech's just going to keep going up forever. There's never going to be a crash again. ARK is the place you want to follow. Then you want to follow the bond market. The bond market gives you such great information. It's incredible, the information you get from the bond market. And you got to watch the increase in money supply. If they keep increasing the money supply, which they are, you wouldn't believe the increase in money supply from July to August. Oh my God, $80 billion. So Trump is going to continue increasing the money supply. He wants this market. He doesn't want this market to come down. And all these deals they're making, all these AI deals, everybody, like remember Oracle shot up through the moon because they're making a deal? Who was it they made the deal with? Well, it was I can't remember who they made the deal. Who was it? OpenAI, that's it, thank you. So everybody's making deals and everybody's excited about AI and look at all these deals everybody's making. We went through that with the dot-com days. It's no different. But it doesn't mean you don't trade the market. You get right in there and trade it. Follow the momentum. Understand how to follow the momentum of money. How many people have a chart that helps you follow the money momentum, where it's going? Few of you. Few, very few. You got to understand momentum. Where is that money going? Where's the momentum of the money? Which stocks is it going to? We know the stocks it's going to. It's the same 5, 6 stocks. And then when they rotate out of these same 5, 6 stocks and they rotate into banks. Then when they rotate out of banks, they'll rotate into leisure. The one thing you better stay away from, everybody's going to try to convince you that you got to be in stocks like Clorox and Coca-Cola. No, stay away from those stocks. You can trade these big tech stocks and keep trading them. And all you just got to know, when do you stop? And we'll help you with that. Join my gang free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.